Welcome back to the monthly portfolio update videos. I know it's been a while since I did one of these, as I've now made the change to monthly instead of weekly, as I believe it kind of allows it to be less reactional. Now instead of stocks going up and down quickly off news, I can kind of judge how my portfolio is going over a longer period of time without the ups and downs. It's a bit more stable, and I can really get a bit of extra time to kind of go through things, talk about changes that have happened in positions in my portfolio, earnings reports, just things like that, so it can be a bit more in depth of a video, a bit longer. And that's kind of the goal for this video as well. Typically with my videos, I'll have a script, I'll go through it, I'll chop it up, keep it all neat and short. But for this one, I kind of wanted to just let it run, let the tape run, and just kind of go off the top of my head and kind of go through my portfolio, my plans, what I'm planning to invest, how much I'm going to invest, and just to be a bit more transparent and kind of go through it off the top of my head. Well, I guess the best place to start is probably with the valuation. So the portfolio currently sits at $11,477 US. That is roughly, I can get it up and check now, USD to AUD. I am in Australia, so 11,477 is 16,480 Australian dollars. So that kind of gives you a bit of a gauge. The portfolio is currently down 6% after a really rough start to the year. I was buying heavy at the start of the year and kind of at the end when things were a bit more expensive, just because I had a lot of money and kind of capital to allocate towards my positions. And I don't regret it at all. It taught me good habits of investing, and if I didn't invest that money, I probably would have spent it. So it's kind of going towards building a portfolio, and it is rewarding to kind of look at it grow. Even as the start of the year has been rough, things are kind of getting back to where they were. So I'm only down 6% now. I know a while ago I was down like 15, so kind of looking at it then was a bit more rough than it is now, so it can only go up. And I mean, even you look at the settlements, so I have $100 that's going to settle soon. Just to explain that, I got 2 free eBay stocks just through referring people to stake. So as soon as I got them, I sold them. And I have $6 in buying power, which I believe was from JP Morgan dividend. So that together, that's where that money's coming from. And I'm planning on just probably chucking that in VOO or maybe another position. I'll decide when that settles. But probably going through the portfolio a bit more now. We'll start with Apple, my biggest individual position. Just that's not a ETF. It's up 22, basically 23%. So that's massive up, especially recently. Now, I mean, you look at the graph, go through it here. Let's look at the last 3 months. The last 3 months is up 5%. The last year, it's only up 12. But I mean, when you look at it, it went as low as 132, and now it's all the way back up to 165. So I know I bought in some kind of at that 140-ish kind of range. So it was nice to get in there again. I saw it as a bit of a buying opportunity because Apple's obviously a great company. It's not going to stay down forever. It was a bit of a market swing more than it was something to do with individually Apple. So I know I bought some more of that, and I plan to hold it. I think I'm up to 13 shares now. So average price around 134, and so I'm up $400. So it's nice to look at that and see a bit of a gain after especially how rough this year's been. But second, Costco, not a big position in my portfolio, something I did really want to add to. I still see it as a great company. I've watched so many videos on it. I looked into it. It's basically got the perfect business plan, model and everything. So I can probably do a video in the upcoming future about more of a deep dive into Costco. I believe it's very interesting to look into. It's something I do want to grow. It allows me to diversify. I mean, you look at my portfolio, even you look at the earlier videos, I was so heavily in tech. So trying to expand a little bit into something like Costco or JP Morgan and other things I'll go into with kind of like the future of the portfolio. But I'm up 5% on it. Not a big position, so only up $22. Thinking of holding it for long term. Good position, great company. And third, Google, another position that's decently sized, not too big, but down 13%. Still really believe in it. Google's had a massive time recently. They even did the stock split, so that was a massive thing with the company. I mean, you look at the 3-month chart, it's just up, down, up, down, up, down, up, down. So it's like kind of judging how it is a bit rough. I mean, even over the year, it's down 13%. But you look at the long term, it's an amazing company. The earnings they put out recently, good earnings, even with fears of advertising issues. It's just a great company that I see myself holding for long. The only thing I don't like about it is it doesn't give you the same stability as something that offers a dividend, but I think the growth is there, and I think it's probably better for them to invest it in themselves than just hand out dividends. So I think that's another position I plan on holding. Kind of was going through it. I know it looks a bit rough now at the 13%, but when I kind of grand scheme it, I'm not worried about it. I know it's a great company, keep expanding, keep growing, and I don't see it going anywhere anytime soon. So that's Google. Probably staying in that tech. I'll go through my last tech position, I should say. Meta is kind of the bullet you have to bite. When you look at my portfolio, that's the one that's been hit the most. Really rough purchasing time. I bought it, and I bought more of it before the whistleblower issue, and you can clearly see that I'm down nearly 50%. So that's a rough one to kind of bite the bullet on, but definitely taught me a lot of lessons. Looking back at it now, I probably wouldn't have bought it. It still isn't a position I want to add to. I think it's still a great business, and I don't see the point of selling it now when it's low. I think it will go up. Maybe it'll take a while before it gets to the numbers that it was previously, if it does get back to that, but I don't see the point in selling it now when I'm down nearly 50%. So it's just kind of one of those ones where it's just you have to take the loss and keep it moving. Learned a lot about it. Still think it's a great company with all the different apps they own, all the money that they still make. I think it did get hit a bit unjustifiedly rough. I don't think it deserved the 50% price rate, or 50% price cut, I should say. But that's just the end of the day. You're going to have some winners, you're going to have some losers, and you just have to diversify enough to the point where hopefully those small ones don't kill your portfolio and your returns. Microsoft, another position. When you look at it, it says I'm only 2.8% up, which is true. But the reason for that, and the reason compared to Apple, is I started buying Apple when I first started investing. So well over a year now, year and a half. I bought heavy into Apple, but I never really bought heavy into Microsoft. I had Microsoft shares, but I never really did a deep dive into the company and kind of adding it. The longer I invested, the more I wanted to get into it. And yeah, the more I saw it was a great company, so I slowly added to it, but that was as the price was getting higher and higher and higher. So my overall returns don't look as good, but that's because I was buying more as it was getting more expensive, and I still think it's a justified price. So this is a company I can easily see going to the 300s, 310s, and yeah, I'm happy to be in it. It's nice to see it's in the green now. My average share price is around $275. I think that's still a great price for the company. You look at their subscription models, everything's going up. Azure, yeah, it's just a great company. They even offer you a little bit of a dividend, a little more than Apple, so you can't complain about that. And yeah, it's something, again, I see myself holding for a long time. I don't see myself selling it anytime soon, unless the price got to a point where it's incredibly justified to maybe take my money out of that and purchase something that's been hit heavier. And yeah, the ETF, that kind of sums up how the whole tech market's been. It's the QQQ, and that is a position that really has opened my eyes. When I started investing, I was really heavy into Tesla. You could see my early videos, Tesla, things like Square, Apple, even a bit of Microsoft. I was really heavily invested into tech because great growth stories, good to look at. You look at some of the biggest companies in the world, they're all tech companies, and yeah, it just looks like a great thing to get into. Especially a teenager who's looking at the stock market. You look at companies that you know of, like your Metas, when you look at stuff like Instagram, Facebook, or your Apples that Tesla, you see all the stuff about Elon Musk, but Yeah, I've kind of slowly been trying to shift out of that, and then I made a bit of a mistake by heavily investing into the QQQ when I was still trying to diversify my portfolio, but I still wanted to have a strong tech base. But looking back at it now, probably should have just kept that money into the S&P 500, since I already had so many tech positions and was really heavy weighted into that sector. But again, that's another lesson. Still offers me a little dividend. It's still a lot more diversified. At the end of the day, you're still in a range of companies and a range of sectors, and tech did get hit, all growth stocks did. So that's why the QQQ really did get smacked around. But it's not a massive, it's a big position at the end of the day, but it's not a game changer or anything. You can kind of take the loss on the chin and kind of learn from it. And yeah, that's my kind of the tech side of things. JP Morgan is another position I want to speak about. Down 27% basically. Rough looking at it now. Banks really took a hard hit. I mean, you go through any of your options, your Goldman Sachs, your JP Morgans, your Bank of Americas, and they were all have been hit. And I chose JP Morgan. I thought it was a great bank. I like the leadership there, everything going through it. I wanted to diversify more into financial sector as well. And yeah, it took a hit, but it's not the end of the day. Looking at it now, I did purchase at a rough time. I probably didn't do my due diligence and kind of go through the steps I should have taken, but I still believe in the company in the long term. Bit of a rough time now with interest rates and overall everything that's going on, but I'm going to hold out and just try to diversify my portfolio a bit more and just kind of be more in a bit more sectors, even if that means, yeah, I took a bit of a rough loss, but at the end of the day, I'd rather get these learning experiences now than down the line when I'm a lot older. Getting them ticked off now while I'm young, it just makes life a lot easier, kind of getting these experiences out the way, especially when my portfolio is only worth 11 grand. So it's not like this is my retirement fund, or this is something at the end of the day. I just turned 20, so I have ages of time to learn and kind of go through this and use the power of compound interest. And the last two positions, SPY and VOO, exact same thing. I'm actually thinking of selling my SPY position and just chucking it onto VOO so it's in one position. I don't know why I bought SPY, but I'll go through SPY, probably sell it, put it onto VOO, and VOO is my biggest position by far. I mean, you look at it, over $4,000 invested into it, 10.67 shares. Took a bit of a hit with the overall market, but still think it's always great. There's never a bad time to really buy into VOO, because yeah, times might be high, but I'm not looking at it from a 1 or 2 year kind of outlook. This is more of like a 10-year outlook, because in 10 years I'll be 30. So at the end of the day, I have a long investing horizon ahead of me. So investing into it now, I can't see it going down over a 10-year period. Just kind of getting my foothold into it and kind of building a position that can pay me a good dividend while letting me be diversified, and yeah, giving me a bit of stability. I can go to bed at night knowing my portfolio is not just all of a sudden 30% down, like in the case of my Meta position, where I woke up one day in the whistleblower saga and everything was just in the dirt. So yeah, I plan on continuously growing that position. I think I probably want it to be around maybe 60%. I think that is a nice little threshold around there. I think it's roughly, yeah, I think the first goal is going to be to get it to like 50. I think, but when you add the SPY and even QQQ, I know it's a bit of a different ETF, but overall my ETFs take up around 50% of my my portfolio. So that's nice to look at now, because when I originally started, it was all just individual stocks, very up and down. But I think as up and down it is now, I'm kind of in the process of trying to get it a bit more stable. And while prices are low, I think it is a great buying opportunity. I just haven't really had the funds at the moment, just due to external factors, but that's something I'll get into now. The goal for the portfolio in the upcoming month, I'd say, kind of going through August, is probably to invest another $500 in. I know that's not too much, because my original goal was to invest $200 every week, kind of keep it consistent and hit that $10,000 a year. I can still hit that $10,000. It's just right now my main goal has been building an emergency fund. So I'm moved out of the house, I pay bills, I pay rent, groceries, fuel. I have a lot of other expenses that probably take priority over an investment account, especially at such a young age. So I'm kind of ticking those boxes off first, getting myself set before I lump money into my account just to kind of get the number up. I don't want to be pulling money out of the account. So any money I have invested, I want to stay invested until I deem it's a good time to pull it out, not the fact that I need money, so I'm pulling out money from my investment account. So yeah, I probably want to invest 500 this month, maybe into VOO or something. I'll go through that, kind of the options that I have weighed up. And yeah, that's probably the goal for my finances. Getting the emergency fund sorted first is probably what any financial advisor or anyone who's helping you with finance would say. Kind of get yourself prepared, because at the end of the day, you don't want to be pulling out of investments at rough times, taking losses just because you need money. So yeah, I'll get that sorted. And when it comes to my upcoming purchases, I'll be transparent. I'll go through what I purchased in the next video, but kind of looking at my transactions from the last month, kind of just going through it. I'll go check some of my buys. I bought some Microsoft, I bought some JP Morgan, I bought some VOO. That's pretty much it. Kind of going through July, I really didn't buy much. That was really all I went through. Even the VOO buy was end of June, but I haven't done a portfolio update, so kind of going through June, more VOO, more into Apple and Microsoft when they were getting hit, more VOO. So yeah, I haven't really been too active in my purchasing side of things, but towards the end of the year, I definitely will be. I'll be putting more money in, trying to get the valuation up, trying to get that. The goal is to get the portfolio up to 20,000 Australian dollars worth. So looking at it, that's around 3.5 grand I need to still put in, which is easily doable, and that will hopefully get the portfolio up a bit more, make it a bit more respectable, and kind of just teach good habits of investing the money. And kind of hopefully in 10 years or so, I'll really start seeing the dividends. I can hopefully in the upcoming years, the goal is to get it to 6 figures. That's a really big goal of mine, because at that size, the portfolio can kind of work for itself when it comes to, I'll get bigger dividends. The compound will have a much greater effect. The numbers will start being bigger, and yeah, and hopefully by then I've already learned some of these lessons, these learning curves. So I won't be as new to the game, as you could say. That's kind of like the goal for this. Like I said, I want to keep steadily investing for the next 10 years, kind of get the portfolio up, and yeah, hopefully get it to 6 figures sooner than later. And yeah, that's the overall plan for August, and that's kind of the wrap up of how it's been leading into the month. This video did get pushed back a little bit, been really busy with university and stuff, so this is a different type of video. It's a lot more raw. There's not going to be much editing. It's just going to be kind of me speaking to the mic and speaking about my investments. A bit of a longer video as well, kind of try that out. Normally my videos are quite short, so kind of making a longer one, seeing how that goes. And yeah, I plan to make these videos longer every month and just kind of keep them a bit more in depth. Hopefully in the next month I can kind of go through all my positions, my plans for them, what I bought, my predictions for how the stuff will go. And yeah, stick around for that. I'll have a September update, and I'll go through that with you guys, and hopefully by then the portfolio will be sitting around closer to like your 12.5k ratio. And yeah, hopefully that 6% looks a bit more like a 0, or maybe even in the positives, who knows. And hopefully we can chat soon, and I can kind of make these a bit more consistent. I know that's been a big issue for mine, is keeping my uploads consistent. So maybe even I'll start streaming market opens and closes is something I've been thinking about, but just kind of going through the portfolio again. It does look a bit rough right now, but that's kind of what is expected. There's not many investors right now who've had a good start to the year. And yeah, that $100 that I'll have from the settlements and the buying power, I'm going to look through. More than likely, I'll buy something that's been hit. There's a lot of options now that things are a bit cheaper, so always good to buy in now. And stay tuned for more finance content, and the next update will be your September update, and we can kind of go through it again and